Hello, ladies and gentlemen. I hope that you are doing well. Welcome to this new webinar of our platform, Global Fleet. Today, we are going to talk about a very specific but very important topic in international vehicle fleet management. We are going to talk about creating efficiency through the optimization of your software systems. You see on the screen the title of this webinar, Integrated Finance, all your business lines on one system. Indeed, ladies and gentlemen, the key word this year, more than ever, is around efficiency. And with the move from fleet to mobility, our processes become more and more complex. And so it would be great if, as suppliers, customers of very big fleets, you could create efficiency not only in your procurement strategy, not only in the implementation of your vehicle fleet, but also in the processes that need to support all your core business activities. And that is exactly what we are going to discuss today. The information given in this webinar is for information purposes only, and so the content cannot be reproduced without the permission of Global Fleet and Sofico, because Sofico, ladies and gentlemen, is our partner for this webinar, and I would like already to thank Sofico and the experts of Sofico that you see on the screen. We have today with us three true experts. We have Wim Bowens. Hello, Wim. Good afternoon. We have Tom Cornelis, and we have Bram Wallach. And those three people can tell you everything about why and how you need to move your processes when you are managing very big fleets into a more efficient and one only system. And so if you have questions for our experts, then you can ask them, because this webinar is also about sharing experiences. And if you have questions about specific topics linked to vehicle fleet management and the process management that you are at the moment experiencing, then please ask your question. You can do that easily via this tool. There is a section, you see that in the tool, questions. You can drop your question, and after the presentation we will have time for Q&A, and I will moderate the most interesting and most important questions. So make sure that you have your question ready for one of the three experts. And now, without no further ado, let's move on to the first expert speaker, and that is Wim Bowens. And Wim is going to detail what Sofico is doing, and perhaps to start, for those that are not very well, let's say, up to date about the activities of Sofico, Wim, perhaps you can start with briefly describing the core business of Sofico and also the customers that you have, so that we can put everything a little bit more into context.
Okay, sure. Basically, in a nutshell, what we do is we are a service provider to the automotive finance industry, meaning that our customers are mostly big independent leasing companies and captive finance companies. So a finance company linked to an automotive brand. And we service them by offering them a software platform which they use to manage their fleets upward of 10,000s of cars into 100,000s of cars. We do this from 8 offices around the world, and we have customers in, I think at the moment, 32 different countries worldwide.
Okay, so really a global company.
Yeah, absolutely. And what we want to talk about today, as you saw, is the concept of integrated finance, putting multiple business lines on one system. And of course, these business lines is then the business of the leasing company and the captive finance company, which they then use to provide vehicles to the fleet owners.
Great. The floor is yours.
Thank you. When we talk about integrated finance, the concept of managing all your business lines on the same software platform and the benefits that this creates for your organization, I first want to take a little step back because this is a global fleet webinar, and the automotive finance market is not one uniform worldwide market. Some of what I am about to say will apply more to some markets than others. However, if we consider the evolution of the market over time, I think most markets started or are currently in the situation, as you see on the screen here, where you have a separate B2C retail market, which is where the finance companies or the banks are offering financial products to private individuals. And then next to this, a completely separate silo, if you will, is the B2B fleet market, where you have multi-make leasing companies that are renting out vehicles from their fleet to other companies over longer periods of time. Now, depending where you are in the world, the boundaries between these two distinct markets are going to start blurring, are already blurring, or have been completely blurred. What this means is, what we are seeing in different countries around the world, is that the leasing companies are actually starting to target the B2C customers, offering them products like private lease, or in the UK known as personal contract hire, PCH. And if you don't have private lease or PCH in your market, this is essentially an operating lease which is offered to a private person instead of a company. The selling point of this product for the customer is ease of mind. So they get access to a vehicle for a fixed monthly cost and no uncertainty around any additional cost that might pop up. At the same time, what we are also seeing is that captive finance companies, so the banks linked to an OEM, a car brand, or auto banks, are targeting the B2B market, and they create a multi-brand lease offer either by partnering with a lease company or through a white label setup. Now, together with you, I want to take a look at this evolution from a systems point of view. What happens on the software side that helps you run your business? Once you launch a new business line, you expand your business into fleet or into retail, you build up a contract portfolio. And of course, you need to administer these contracts. And this is usually done by deploying a separate software system. So this new system then runs alongside the legacy system that you already have in use. And you come into the situation where you have two systems to manage your business, and these are running side by side. Now, there are a few downsides that probably become immediately apparent if you look at this picture. On the one hand, you will now have all the data that is important to run your business, financial, customer, vehicle data, pricing data. You will have this in two separate systems, which means that your back office staff, and we represented the back office by that little computer monitor there, they will need to access two different systems, log into a different system depending on who they want to work for, a private customer or a business, a retail or a fleet. And of course, your data also has to be kept up to date in two different systems, which is not very efficient. Also, if you want to keep an eye on your performance of your entire business, or you need to draft a report on the entire portfolio of contracts you will have to gather the data from the two separate systems, consolidate the data, and only then can you actually show any type of dashboard or do any type of reporting. On top of this, every system needs integration and exchanging data with other external systems. This could be a general central government database, or it could be an external service supplier that you have to exchange data with. Think of insurance companies, fuel card providers, roadside assistants, and so on, where you have to exchange data about your contract so they can activate these services included in a contract. These integrations will have to happen for both systems, of course. Now, it will be very difficult to build a single front office on top of two different back office solutions. So you probably will have each system connected to their own front office web portal. So we represent these by the laptop for the web access, or the mobile devices for the mobile access to the front office. And your end users will be sent to different front office tools. Now, to avoid these problems, there is a very obvious solution. You should manage all your contracts in one single system, an integrated system. And then the question, of course, is which system can actually handle all your contracts, both the fleet and the retail contracts? They are very similar, but each system is purpose developed, and the retail system is actually built to process a higher volume of quotes and contracts and payments based on a fairly simple product. If you look at it, you break it down, your car loan, if you want to create a quote for a car loan, you will need to have the price of the car, the term of the loan, and the interest margin, and then you can create an amortization table and a pricing for it. On the fleet side, your fleet system is actually developed to process a more complicated product, but at lower volumes. So you will need a lot more details before you can quote a price. You need to know the exact vehicle and the options on the vehicle because they have an impact on residual value. You don't need just the price of the car alone. You also need a lot more details on the driver, like the driver category they belong to and the car policy linked to that driver category and so on. So it's a more complex and diverse situation with more diverse customer and driver touch points and use cases. The product itself that we are talking about, the operating lease, has the same financial component as the retail product, but it also has some additional services on top of it. So you can have repair, maintenance, tires, roadside assistance, and so on. And each of these additional services included in the operating lease will have its own pricing parameters. So to manage all your fleet and your retail business on one system, you will have to either enhance the retail system so it can handle the complexity of fleet products, and then you can add your fleet contracts to your retail system. Or on the other hand, you could enhance the fleet system to enable it to deal with the higher volume of transactions that are typical of retail. And then you can add your fleet contracts to your retail system. Now, at Sofico, we have developed our Miles solution as a fleet management system initially, but our customers in several countries saw the lines blur between retail and fleet businesses, and they started expanding their product offerings, which means that they quite soon ran into some of these limitations that we have just listed. And for this reason, we have enhanced our Miles software and turned it into a hybrid system that enables our customer to administer both the fleet and the retail product and the business processes that go with them. Now, we don't want to make this a pure theoretical PowerPoint exercise, so I've asked my colleague Tom to demonstrate in the system, actually in the software, how we handle some of these differences between retail and fleet. But before I hand over to Tom, I just want to remind that if you have any questions, you can submit these via the chat, and then Stephen will read those out to us at the end in the Q&A. Thank you, Tom.
Okay, can you see my screen?
Yes.
So you can see Miles now. Is that correct?
Yes.
Yes, okay, then let's get started with this. So yes, after this short theoretical kind of explanation of what we do at Sofico and how we have developed Miles from a pure fleet-based solution into also a solution that can be used for retail, I would like to take you through a couple of quick instances of where you can actually see this happening in our system. So what I'm showing you now is the out-of-the-box solution, which means that all leasing companies who just get started with Miles, they start with this. And then based on this, we start doing extra development and extra configuration that is tailored specifically to that customer. Now, I'm just going to show you a couple of very basic things because anything with any real complexity is, of course, very hard to show in a webinar as short as this one. So what I would first like to show you is how we can handle multiple types of customers. Wim has already mentioned the fact that we have retail customers, we have fleet customers, so this means we have businesses and we have a private person with whom we need to deal when we have these business transactions. So what we do in Miles when we create a new customer is we start with kind of a blank slate as a page. This is what we see here. The very first thing we need to choose when we create a new customer is their legal entity. And based on their legal entity, this page will actually load in or the applicable user interface template. So if I choose a company, then Miles will now load in a UI template for that company. You can see that I've got a trading name to fill in, a legal name, I've got an accounting norm. These are typical values that we want to attribute to a company. A private person will probably not have their own accounting norm, for example. And if they have a trading name, then they have strange parents. So instead of just having a generic customer page that we just try to have work for everyone, we do load in specific fields so that you can fill in specific values for certain types of customers. For example, if I want to create a customer named Sofico here, I can very well do that, have Miles load in the data it needs, and then continue with my customer creation process. The result of that would then look like this, where I have a company customer, which will be linked to a certain leasing company. In this case, Sofico Lease is the dummy company we use in demonstrations to work with business customers and to have the operating lease contracts. Now, if I would, instead of a legal entity that represents a company, create a customer who is a private person, like here, Tessa, who is also a dummy name, so there are no privacy problems going on here, no worries. We see that I've created Tessa here, and now I have less fields because there's less data I need to know of her when it comes to her status as a customer. There's a lot more data that we can store from companies than from people, of course. So I've got here her first name, last name. I've got her birth date. That's a field that I wouldn't want for a company. And what we will then see is that for the rest of the customer page, the panels that we will see here on the left side are actually generic. So we have these ready to go both for our private person customers and for the company customers, which means that I am able in my demo environment where we need to be able to show everything to prospective customers. We can show both how a private person is completely configured, but I'm not going to go through that now because that would take us too far. And I can also show how a company customer would be fully configured and set up in our system. Now, what's perhaps even more interesting than just looking at some dummy customer data is to look at a quote. So if let's first look at a company perhaps. If a company contacts the leasing company in any way, this can be through a front-end portal. They can just send the dealer quote to a leasing company. There are, of course, multiple ways of contacting the leasing company. But however they do this, a quote will have to be created in Miles. Let's now assume that it doesn't happen automatically through a front-end portal, but we have to do it in the back office. Then we will fill in our customer, and based on the type of customer that this is, we will have a certain number of products that we can choose from. So here for a company and my leasing company, my brand Sofico Lease, I can choose a finance lease, a fuel contract, maintenance contract, and operating lease. This is not an exhaustive list. This is simply what we've set up in our demo environments. So of course, any other products you may wish to use Miles for can also be created in the system. However, if let's first select this. So I select operating lease here, and you'll see that Miles loads in a number of fields that have to do with that product operating lease. For example, that residual value amount, which is quite important, of course, in the context of an operating lease, is visible here. But if I create a quote for a private person, then a standard operating lease does not apply. And in that case, we will see that Miles loads in for us different quotation templates, different products, which I can now choose. For Tessa, I can choose a car loan, or I can choose a personal lease, which Wim has already touched upon as well, where she has a car loan, well, not really, but where she leases the car in addition to getting extra services, very much akin to an operating lease. So let us have a look. If I select car loan here, then we will see that again in our demo environment, we can provide a small number of services. So this is basically just us as a leasing company financing the car and charging additional fees for the administration that we have to do regarding that financing. But if I, on a quote for an operating lease, have a look at my products, this is a completely different beast. This is a much larger set of services that we provide. And here we see that we have our financial rental as well. So here we have that financing part, which has to be repaid by the customer. But in addition to that, we also have a whole lot other services that we can be managing for that customer. Now, as in how strict all of this setup is, as in which services we need to add to a product and which ones we don't, that is completely configurable as well. So this is kind of what I wanted to show you, just a very quick look at how this would look in the back office with the same system, the same environment. We can do both retail and fleets. For each of these, we will have different formulas, different calculations, different workflows that need to be done. The credit scoring process will be done differently. The data we register will be registered in different locations, but everything retail related can be built into this fleet or this originally purely fleet-based application. So I hope this was interesting to you. And then I would like to yield the floor again to Stephen.
Yep, thank you, Tom. So if we go back to this presentation, putting all your business lines on a single system has some obvious advantages. On the one hand, all your data is now in one place. It is easier to report. There are less interfaces to develop, and you can build one front office if you need to do that. But on top of this, an additional benefit is that you have a less fragmented and a more unified IT landscape, which will be easier and cheaper to maintain. Now, if we want to make the picture complete, we should probably also add in wholesale finance, which is an important business line for a lot of our customers. For many of the OEMs and their captive finance companies, the dealer network is the route to market. And wholesale or commercial finance, if you will, is quite a necessary part of their business in supporting the dealer investment in real estate or to provide floor plan lending to the dealers. So if you see that we now have 3 potential business lines set next to each other, all with a different system, the complexity of the IT landscape increases even further. Whereas with all your contracts on one hybrid system, you would benefit from a number of additional things that you can do. For example, you will get the ability to use the asset, the vehicle, as a unique identifier in your system and link data from all the different contract types together to keep an overview and a history really of each car across different business streams. Also, if you need to generate risk and audit reporting, that can be done a lot more efficiently. And you also have the capability now to start netting cash flows. What you can do is take all the transactions into account where you get money from the dealer and pay money for the dealer across both your wholesale and your retail portfolio. And then you net them against each other, resulting in a dealer payable or a dealer receivable. On top of that, there is some operational efficiencies that you will get that are not possible if you do everything in separate systems. Like, for example, setting your pricing parameter once and then applying them to different contract types, or applying different pricing parameters depending on the contract type. And also another thing you could do that gives you operational efficiencies, just one example, is that you could take part exchange cash payment and then add it to the dealer wholesale credit line. If everything is in one hybrid system, these become possible. And of course, not unimportant, multi-cycle financing also becomes a possibility, where you use one vehicle across different contract types. So it could be that a vehicle is first linked to the wholesale contract for the dealer and then used on a B2C contract or a B2B contract, or it could go from first a B2B, a fleet contract, to later a B2C, a second-hand car finance for a private person. And we think that with the increasing share of electric vehicles in fleets, we will see more and more multi-cycle financing in the future. There is another benefit to this integrated finance system, which is a little bit less obvious at first sight. And the reason for this one is that our business at Sofico, as a provider of software to the automotive finance companies, it's sort of situated on the intersection between 3 different industries that are all quite quickly evolving. You have the automotive industry, you have the finance industry, and the information technology industry, which are all rapidly changing. Our customers, the retail and the fleet customers, or doing both more and more, will have to transform basically their whole business model to respond to changing trends in society, changing customer preferences, and changes in technology. And pivot is the word that is most frequently used for this process of transformation and changing strategic direction. And in our industry, it often means that our customers will have to reinvent themselves as providers of mobility services. And it means that they are no longer choosing between a B2B or a B2C product, but they are starting to work on B2B2E, business to employee. The large fleet owners that are their customers want to offer their employees, the end users, multiple mobility options to get from A to B, which means that you have to give these fleet managers, or perhaps you should call them mobility managers, and the end users the tools that meet the demands of modern consumers. So you want to respond to these market changes, and you want to launch new product to meet new demands. An integrated finance system is in this case definitely an asset, and I would almost say a requirement to do that. Let us consider one example, the first tool that many customers get into contact with when they start on their customer journey towards a vehicle, whether they want to own it or use it. It's the online showroom or the online purchase experience, where if we see a shift from ownership to usage, you will no longer have to provide a monthly cost. You will no longer have to provide a sticker price for the car, but you will have to provide a monthly cost for having access to a vehicle. And if you send your customer to different front-end office tools, then that's really not an ideal user experience for them. So what you would need to provide is an online self-service tool that your customers can use, whether they are the fleet manager or the user chooser driver or a private person. And they there either select a pre-configured vehicle or they configure their own vehicle, and then they compare the monthly cost between different finance or lease products. And this tool needs to offer a great user experience, and it needs to do so not just on a web browser, but also on mobile devices. So now let's turn our attention to innovation in terms of product offering in the market. As a mobility provider, which the leasing companies are becoming and the captive finance companies, you want to, or maybe you even have to, offer new services like car sharing or multimodal mobility. And if you set up a new system next to your fleet and your retail and your wholesale for every one of these new businesses, the spaghetti integration of all these business lines is really not viable. It becomes very impractical, and it becomes real expensive to manage this whole IT landscape. So what you need there is an integrated finance system where every time you add a new business line, it means basically adding a new module or defining a new product in your system. And you can then administer a whole variety of new products and services, and all the end users, whether they are lessees, whether they are drivers, whether they are users of mobility solutions, or whether they are subscribers, they all sit in your one platform. And perhaps more importantly, and this is the less obvious benefit of an integrated system that I mentioned before, an integrated system also gives you the flexibility and the freedom to launch new innovative product offerings by combining aspects from different types of product that you have on your system. One very basic example perhaps is subscriptions. A subscription basically is an operating lease contract, but it has greater flexibility around the term and the termination of the contract. But you could also consider, if you have both fleet and car sharing within your product portfolio that you manage on your one software system, that you take an operating lease contract between a leasing company and a B2B customer, and then you add corporate car sharing as a component to that to create a new product offering. Or we mentioned private lease, personal contract hire before. You could see a situation, if you are capable of doing car sharing as well, that you take a private lease contract and you add in a peer-to-peer car sharing component. What that would mean is that you allow the user to share his lease vehicle with his neighbors. And every time the car is shared with someone, the lessor receives additional revenue from the car share user. And you can then even give the lessee a kickback and give them back some money in the form of a reduction for their next monthly lease price payment. So if the car sits on the driveway all month and only the lessee drives it, then they have their normal lease payment. But if the car is used 3, 4, 5 days in the month, then the next monthly payment will be lower because it is deducted. So the last one that we will see coming more and more important is multimodal mobility products, where you can use different modes of transport to go from A to B. And these are then all aggregated from all the external transport service providers, and you are then billed these. Now, some of these innovative products are only possible because all your contracts are within this one system. But it's also important to look at, from a system point of view, how things are set up in the system, because it means that you need fundamental change in the way that your software will deal with contracts. My colleague Bram will clarify how that exactly works. And once more, you can submit your questions for the Q&A via the chat. Go, Bram.
Thank you, Wim, and good afternoon, everybody. Welcome on my behalf as well. There's a saying in asset finance that if the asset appreciates in value, then you should own it. Now, this is mostly not the case with vehicles. And the other side of that is that if it depreciates, then you should lease it. And that's been true for a long time, and we also expect that to become a strong trend in the future. Now, traditionally, most of those leases were fairly long-term, or at least fixed-term contracts. Back then, we talked about contracts. These days, contract becomes a bit of a problem, and people want more flexibility. They don't want to have that feeling of getting locked into something. So these days, it's very common to talk about subscriptions, even if some of those are still fixed and long-term. But we see increasingly people offering more flexibility, which is logical. It makes sense. People's situations may change. Family situation might differ after a couple of years, and the car might not be a perfect fit anymore. Or in some cases, if you live in a metropolitan area, permanently having that vehicle parked in front of your door, or even having to look for a parking space, that might be difficult, and you might just want to use a vehicle when you need it and not permanently take care of it. Traditionally, in miles and in many other systems, I presume, there's a strong link between the assets, in this case a vehicle, and the contract. And this is still true in more flexible cases as well, because somebody still has to fund and manage that vehicle. But if we look at things from the other side, and this is, for instance, one evolution that we have facilitated in our miles system. If we look at it from the other side, you can now have a user, which is a much more user-centric business, a user with a subscription contract, paying, for instance, a monthly fee to participate in the scheme in order to gain access to a pool of vehicles. In that case, you might not be able to completely configure a specific vehicle. You might not be able to choose a color, perhaps, but you get access to a pool of vehicles depending on the parameters of your subscription. Within our system, within Miles, this can now be facilitated in a way that you have, on one hand, the long-term funding, leasing contract, the management of the vehicle, and on the other hand, you can have subscribers, people accessing and using those vehicles, and accessing different vehicles, perhaps over the course of their membership, which could be very flexible indeed. Combine it with multi-cycle leasing, for instance, and you have an option to provide complete flexibility as long as you manage the pool of vehicles in relation to the size of your subscriber base. This, we feel, is a perfect example of when Wim mentioned adding in new business lines. This is a perfect example where we feel with Miles you would be in a perfect position to do that. Having your fleet operating lease business, talking to private individuals, whether they're B2C customers or employees of corporate customers, and expanding your offering into, for instance, corporate car share or even a community-based car share where people can effectively make their vehicle available, get some kickback for that, or the other way around, choose not to permanently subscribe to a vehicle, but get more flexibility and participate in that type of scheme. So there's different options really, and the beauty of it is that if you have an integrated platform for it, you can manage all of that right down to the back end, of course, but also in terms of front office applications, where there's potentially also hybrids coming in. Some processes might be crossing one another, and there as well, there's something to be said for a tool like Miles, which can support that variety where you need it in terms of processes, and at the same time ensure the integration where you really want it in terms of controlling everything related to funding, credit risk, invoicing, accounting, and all of those, which are still very important, of course. Yes, I think on that note, Wim, I can hand over to you again.
Yep. Thanks.
If there's any questions, we'll take them at the end.
Yeah, I just want to maybe summarize our main point of today. I think whether your local market is still split between two separate fleet and retail silos, or whether you have already embraced the new mobility challenges of tomorrow, managing more and more different business lines across more and more different systems, like you see on the right on the slide, is a dead-end street from an IT point of view. The needs of fleet owners and consumers are clearly changing, and as an automotive financial service provider, you need to be able to meet the strategic challenges of tomorrow. You will need a flexible integrated finance system. You need a hybrid software solution that allows you to manage all possible contracted and managed vehicle usage, whether it's financing, leasing, renting, or sharing. And an integrated finance system enables you to become leading in your market through innovative product and service offerings that meet the changing expectations of your customer, which is why we wanted to do this webinar and sort of share our point of view. And with that said, I think we're ready for questions and answers, Stephen. If we can put Bram and Tom back on, then they can pitch in where needed.
Thank you very much. Thank you, Wim. Thank you. Excellent presentation, excellent moderation. You took away most of my part, so thank you very much for that. You did a great job. Thank you also to Bram and to Tom. Tom, thank you for showing the demo. We are now coming to the Q&A part. So if you have a question for Wim, Tom, Bram, or the three of them, then submit your question via the chat function in the tool. There are already a few questions. Here we go. I'm going to launch the first one, and please, if one feels that he is the one that needs to answer that question, you can, of course. The question is, with the Miles system, how easy is it to integrate any possible car policy of a fleet that there might be? You know that there are different policies for different companies. You have policies, if we talk about car policies, you have policies that are really focusing on a certain list price, on budget, on CO2 emissions, and so on. How easy is it for your system to integrate each of those, and also to switch from one to the other after 6 months, 1 year, if a strategy changes?
Let me take this one, perhaps. This is effectively what we've been doing for a long time already in Miles, and we've recently revved up that game in that our current front-end offering also allows for self-serve setup of car policies. Obviously, that also means that the leasing company could still do that in lieu of their customer, and that's not a problem, but it's also available in self-serve now. We basically support two types of car policies, either rule-based, where, for instance, limitations in terms of vehicle emissions, limitations in terms of vehicle types, vehicle makes, and the traditional rule-based policy. That is one type of car policy that we support. The other type we can support now is a list-based policy, the menu option, where depending on the driver category, typically people get access to a choice of vehicles, a subset which has been prepared by the fleet manager with set prices for that matter. So both can be supported, and there's very flexible options related to that, but I won't go into every single detail here, but you can also imagine.
Maybe Tom can tell how easy it is to set up, because there was one element of how easy is it to set up car policies. I think you're most experienced in that part.
Well, the car policies are created in in Miles via our back office application, primarily using those quotation templates. So that's something that I've shown during the demo as well, where I chose a quotation template, and based on that, we had a different product that was uploaded into our quote. Well, those templates are part of what the setup of a car policy. That sentence is going nowhere. That's part of what a car policy is in Miles. So
that was the back office side of things. What I was saying is that we recently also added the self-serve functionality on top of that through the front end, which makes it possible for fleet managers to self-manage. And it's not just car policies, by the way, it's also budget plans. If we're thinking about multi-mobility, and user chooses where people get to allocate a corporate budget to a car, but potentially also to other modes of transport, public transport subscriptions, or even an electric bike lease, for instance. And then we can also support that today. So the budget plan also helps to manage that, and again, can be completely self-serve through our new front-end tools. So the both exist, and it's as easy as you want it, really. It's a lot easier today than it used to be, but still many leasing companies take care of the setup in lieu of their customers. That's a story that we hear more often. Yeah.
Okay. A question, of course, around the ROI and the cost structure. Can you tell us a little bit about the cost structure? Is it for the number of vehicles that a company is managing? Is it linked to a certain contract? Is there a basic fee to use the system? What can you share already up front now with us?
There's three elements for the moment today, but our pricing structure is changing as we are also changing the architecture that Miles is using. Typically, it's based on the number of contracts you manage in the system. On the one hand, you have a license fee that is based on those number of contracts. On top of that, there is the cost of the implementation project. Every Miles instance is installed and then configured to meet the business process or to mirror the business process of the customer. And this is a trajectory or a project that goes between 6 to 12 to 18 months, depending on greenfield or an existing business and how much we have to map to an older legacy system, or the customer is willing to adapt the way Miles is set up. It will depend on that a little bit. And then on top of that, there is a maintenance fee, which is at the moment a percentage of the license fee. But the structure is a little bit changing because as the market is indeed changing and new innovative product offerings are being launched, we are also starting to offer point solutions. So rather than putting everything on the main Miles core application, we are making available modules, point solutions. Like, for example, if you want to do car sharing, you might need an application for car share users to unlock a vehicle and to register the vehicle is clean and fueled and all that. So that is a sort of separate module that we can then include, and that would be a subscription-based fee.
Yes, exactly. Just like the market, we're moving into a subscription business ourselves. And in that case, it also makes it possible to have volume drivers, which are really relevant to the business line, and making sure that we also help our customers to build that business case. Yeah.
Okay. Is Miles based on a monolithic application architecture?
Let me take that one. Well, originally, yes. Miles is a Java enterprise application. It was originally indeed a monolithic application. In terms of technology, that doesn't preclude anything for that matter, but it does have some limitations in terms of deploying new business lines or software to support it, which is indeed why a couple of years ago now we've decided to add an architectural layer, a cloud-native microservices platform, which does allow us to do those point solutions to deploy much more easily, to support also, again, hybrids. Also from a deployment perspective, we can now support both on-prem and cloud deployments, private cloud, public cloud. And yes, going forward, we will see more and more modules coming up on that microservices architecture. And we're also looking longer term, looking towards breaking down pieces of that monolith and providing alternatives in a better way, in a more modular, better scalable, and potentially even high available offering on that new architecture layer. But that transition is going to be completely smooth and transparent. It's not a systems migration. It's not a transition from one system to another. It remains a fully integrated system for that matter.
Okay. And about the implementation, how fast can it go?
It
Is
can
there
go
something?
fast.
Yeah.
If you have a greenfield and the customer agrees to stick to the miles reference implementation, like the predefined business processes in miles, we have seen customers go live in 3 to 4 months. But that really strongly depends on the governance of the project and stick to the standard approach. The danger is usually once the key users start seeing the richness of miles and the variety of possibilities to set up and tweak the business processes, then suddenly there are important things that have to also be set up, and that you always have your triangle of scope and budget and time, and usually that can then make it a longer project. But it can go very fast if you stick to the miles standard.
Okay. Question for you, Wim, linked to something you mentioned in the presentation. You talked about multi-cycle financing, and you also, I think, said something as an example with regard to EVs. So and the question is linked to that. Can you a little bit elaborate on how you see that then? How EVs lending themselves to multi-cycle financing from wholesale to consumer?
Yeah, I think EVs are higher value vehicles that if you use them on an operating lease on a shorter term for 2 years, for example, have enough value left in them that they can then be reused on, for example, private lease. And then you're into this multi-cycle story where you use it as a B2B vehicle on a B2B contract for 2 years, and then on a B2C contract for maybe 4 additional years.
This is reinforced by fiscal policy in many countries. We see governments clearly pushing electric vehicles for obvious environmental reasons. But at this point in time, price parity between an EV and a traditional vehicle is perhaps a bit difficult still, which means that the biggest adoption is in corporate fleets, where the fiscal policy is really important, of course. And that creates an opportunity, of course, to in a second lifetime of that vehicle, to make it available to the broader public and to private individuals who would otherwise perhaps not yet be capable of adopting an electric vehicle. But taking an electric vehicle on a private lease in a second cycle could become affordable to those people as well, and could become competitive compared to a second-hand vehicle. Or even a new vehicle with a combustion engine. So we feel there's a lot of potential use cases in there, and that's also the signal that we're getting from some of our customers that they feel this market is going to really become important in the next few years.
Okay, good. A few questions to end. Is there also an app that is linked to the system?
Well, Miles is a very open system, and through the microservices platform, we're now providing REST APIs, public APIs, which can serve both web applications or mobile applications. On the booking side, for instance, car share booking platform, we already have a mobile app. In the past, we've also experimented with a driver companion app on the fleet side. So yes, we can have mobile apps. The standard app is a bit difficult because mobile apps are usually subject to branding expectations of our customers. So that's where we either fit in with existing mobile applications. We've done that for some of our customers. But yes, if you like that, we can also build your app. Yes.
Okay. If I'm not yet a customer of Sofico, and I have a very complex administration, architecture, etc., and I would like to go with Miles, is there like a training that will be done within my company for some of the people that need perhaps to know Miles, work with Miles, be updated, etc.?
Yeah, that's part of the whole implementation process. And actually, one of the first steps where we implement is to do a requirements gathering workshop, where we will start off with a training so that the customers, people can see how Miles is working. And then based on that, they can tell us how they want miles to work. So there's an initial training so people can tell us what they need miles to do. And then miles is implemented over several project phases. And then towards the end of the project, of course, whole groups of users will be trained. Tom is one of our in-house trainers. We use the train-the-trainer principle. Tom will train the customers' trainers, and the customer trainers will then train all their end users. But it's part of the implementation process.
There's obviously this language barrier, but by now we have 8 offices worldwide, so we also have a local presence in some markets where effectively we can tailor that more to the regional needs and also cater for some different languages potentially.
Okay. Working, of course, with data from other companies, how safe is your system in terms of data security, data privacy, etc.?
Well, first off, we should perhaps point out that it's not necessarily a Sofico hosted SaaS solution. It could be deployed completely on-prem. Some of our customers insist on doing that, among others for security reasons. Most of our customers go through elaborate security testing, pen testing. On our side, we also adhere to secure software development principles, meaning that much earlier in the cycle already we try to cater for security requirements. So it's not just down to pen testing, of course, but yeah, this is an important aspect of every enterprise software offering, I would say. And if you look at the types of customers that we are typically dealing with, then this is very, very critical to our operations, to our business activity, of course. Most of our customers are long-term customer relationships. We would never want to jeopardize those by leaving some loopholes in the system, for that matter.
Final question. Is there a disadvantage to integrated finance?
Well, it does. I think it does require some governance. It does require some discipline as well. You have to think about commonality versus variation. So you have to be very clear on the things that you want to commonize between different business lines, and at the same time, you really need to know where the real differences are and which differences you need to support. So that sort of requires people who have this helicopter view, and that sometimes proves to be a bit difficult, admittedly, in what we see in terms of implementation projects, especially in bigger companies where people are used to working in different departments and where those business lines used to be supported through different systems, but then also through different groups of people, which means that quite often Sofico has to step in and try and bring those people together as well. Yeah.
But it has become clear that the advantages are much bigger than the disadvantages. Thank you very much. Thank you to Sofico for supporting this webinar. Thank you to our experts, Bram Wallach, Tom Cornelis, and Wim Bowens. Thank you very much for your time, guys. Thank you also for answering the questions that came in. There will be a recorded version of this webinar that will be shared on our platform globalfleet.com in the upcoming days. So if you would like to relive the expertise of our presenters, you can. In the upcoming days we will publish the recorded version of this unique webinar. And of course, you will also receive a short satisfaction survey so that we know what you thought about the webinar and how we can improve future events. Now, I would like to end with 2 new initiatives that can perhaps be interesting for you in the audience. The first one is already next week, and this is only for fleet customers. We will start again with the Global Fleet Managers Club. This is the best practice sharing network of global and regional fleet managers. We will have a meeting next Tuesday on the 23rd of February in the afternoon, Central European time. We will talk about global fleet trends, and yes, we will have the case study of the Global Fleet Manager of the Year, Jean-Philippe Carrais of Hilti Group. So he will join us for this first meeting. So if you are a global or regional fleet manager and you would like to join, then please let us know, because this will be a great first session of the club this year. And then secondly, we have been talking about efficiency. We have been talking about processes. Well, those two elements, efficiency and processes, will also come back in the Connected Fleets conference that we organize on the 18th of March. So on the 18th of March, a new digital conference of Fleet Europe, talking about connectivity and maximized efficiencies for commercial and service fleets. So we will have also a focus on last mile delivery, light commercial vehicles, etc. If you are interested to join, you can just take a look at the website, and I'm happy to meet with you in an upcoming initiative of Global Fleet and/or Fleet Europe. Thank you very much, and bye-bye.